Afternoon, everybody. How are we doing? Welcome to Yen Intervention Day. Number 2. See if this one sticks. So, yeah, Japanese decided to press the button. Didn't mention it, didn't warn us, just press the button. There you go. So, yeah, it's happened. Another big move. Just going back to news, just see if there's anything else. No. So yes, so big intervention move just gone in on the yen. Roughly, it's 423 pips. 423 divided by 82. So 5 ADR, just over. So somewhere between 4 to 6 ADR is typically what an intervention move is. So if you go back and measure previous interventions, that one there was 560. That one there was 467, and the one we've just had is 430 odd. So obviously we'll keep an eye on that throughout the session. And see what happens. But if you want to get in on this, the way to do it is to wait for the pullback, because if it's successful, you will tend to get a second leg as per the previous. So second leg will come in, and then typically that will be the start of a move. If they hold the intervention. If the intervention doesn't hold, we go off again and we see where the next high is going to be. So see how we go. So I'm out of all my yens. Thankfully. Done. Not touching it. I am not trading the yen. Okay. There we go. Afternoon, Steve, Evil, Church, Crom, Danny, Roswitha, Kenley, Callum, Big, Les, Gregors, Bogdan. Got a lot of people in this today. Fire, Fletch, James, Neo, Paul, Florian. CPI came in light. Rate cuts coming in the US. Yep. Possibly. We'll have to wait and see what the Fed says. Exoupdate.news, Mimo, David, Abdi, Pot DJ, how are we all doing? So this morning, so there's quite a lot of news going on today. I'm stuck in 2 hedges at the moment from this morning on the DAX and the FTSE. Didn't really get anywhere today. We're stuck sideways. So I may have a little bit of a margin problem trying to get into the US indices this afternoon. So I'm just going to see what the open is like. But we've had obviously a fairly decent whipsaw off the back of that. So we'll have to monitor and see what happens. It's not very big. It's only about a quarter of an ADR, half an ADR maybe. Yeah, it's about half an ADR whipsaw. So I suspect the open will still have volume, but we'll wait and see what happens at the open. So yeah, so this morning we had GDP for the pound come out as positive. Yesterday, I'm going to have to refresh my news feed because it isn't going back far enough. Yesterday, we had where are we? 7 o'clock this morning. We have to go back all the way back here. Right. So Man basically yesterday So obviously we had the Powell speech. Fed wants to be more confident about inflation before it drops interest rates. Today they got more confident. I do have some confidence that inflation is headed lower. Inflation coming down sufficiently and sustainably to 2% target, but no dates. So that was the Fed, Powell saying that all of that yesterday, which didn't have an awful lot of impact. Then Mann came out and said from the Bank of England, basically on rate cuts, until I see some deceleration in services prices, I'm not in a position, basically. Inflation, we see now is a touch and go. Basically meaning, yes, we've hit that 2% target on inflation. Why is my pen not working? Hit that 2% target on inflation, but they are now expecting a bounce and a sustain at above 2%. So Bailey's been saying for the last 12 to 18 months, we will not do anything with interest rates until we achieve a 2% target. We achieved the 2% target. Now they've turned around and said, actually, it looks like we're going to bounce ever so slightly above the 2% target, so we're still not going to bother doing interest rate drops. So massive confusion yesterday from the pound. As you can see, the pound went nuts and rallied like crazy. The US dollar's obviously just dropped, which has given it even more of a push. But ignoring that move today, that was the move yesterday. So it's really difficult to gauge what is going on now, because the pound we assumed was going to be a rate cut in August. Now one of the members is basically saying, don't fancy it. So we've now got the Fed, which was saying we're not going to change the rates until 2025. We've got the traders, whoever they are, now factoring in a 50% chance of a drop this year, possibly two of them. And now CPI has come down, but unexpectedly, but it's still massively above where it needs to be. They want it at 2. It's at 3. It's 1% away yet from where we don't want to get to. The pound has hit the 2%. They're still not dropping rates. So it's a really tricky situation to read at the moment. Yes, we've got a slightly better than expected announcement. Yeah, it's 0.1. Yeah, we're on a 0.2. We're expecting it to stay the same. We got a 0.1% differential on a month-on-month basis. It's not a lot, is it? The main CPI, which is not core, we did get a 0.2 differential and a 0.1 overall. So yes, it's going better for the US, but I wouldn't expect necessarily this US move to hold. I would not be surprised to see an A-shaped recovery on this, but we'll wait and see what the market makes of this. So obviously the Japanese have seen the CPI number and decided, hey, you know what? This is the time, because they're expecting everybody to pile out of the US dollar and the US dollar now to weaken. So what do you need to do? Sell your bonds at the highest possible price and convert them into yen, which is what they've just done. So they've just done an intervention move because they're expecting a depreciation in US dollar. If that happens, their overseas investments drop. So it's better to take them out now and turn them into yen, power up the yen at the same time as the US dollar drops, which is why we've seen that move. So this is, again, not necessarily going to hold, because if that US dollar move we've just seen, that knee-jerk reaction, is not sustained and we get an A-shaped recovery back to source on it, this will probably do the same. However, they will probably try a second run at it. So we will see what happens. So absolute mess today. Can't make head nor tail of what any of these numbers mean. What was said yesterday, don't forget, Mann is just 1 out of 9 members of the Bank of England that vote on interest rates. Yeah, Bailey has indicated he's happy. So if Mann says, nah, don't fancy it, and the other 8 do, interest rates still come down in August. Yeah, so it's not the end for the US, for the pound. So that we need to wait and see what the market makes of that long term over the next couple of days, and obviously moving forward. So yeah, big news today. This could finally be something that gives them a little bit of confidence to actually say, do you know what, we might get a rate drop this year. And if that does happen, then we will see that decline in the US start. So we'll see. But yeah, big news today. So obviously that is the big one today. scroll forward. So there's your GDP, 0.4 on a 0.2. So GDP has gone up more than we were expecting in the UK, which is great. Again, another reason to drop those interest rates. Seem to be doing it. CPI in Germany we had out this morning. That has remained stable. So that tells us basically that we're not bouncing in the Eurozone, potentially. We are staying where we are, which means that Lagarde will probably stick to not changing the rates next month and then doing it the month after. So that gives us a little bit more confidence in that drop, stay, drop, stay, drop, stay, which is what the ECB have decided they want to do with interest rates. So gradual decline in the euro moving forward this year. Apart from that, that's pretty much it. I mean, what else do you need? We've had a massive shock to the market twice in 24 hours. And obviously the intervention. So yeah, big moves today. So traders lift ECB easing bets after US CPI, seeing 20 basis points in September. So there you go. So that is basically saying August, we're freezing. We are dropping in September by 0.25%. Futures pricing 85% chance of a September rate cut after that CPI data, up from 70%. So again, more confidence in the market that the Fed is going to come out and say we're going to drop the rates. Don't forget, this is rumor. Yeah. Rumor quite often is completely wrong. The Fed haven't come out and said anything yet. So don't read too much into this movement. Yeah, it is. Yes, it's a big move. But as you can see, we've undone one ADR already. Sorry, 1.5 ADR. 1.5 ADR of that move is completely gone now. How long does it take us to get a 150 ADR move? Just done it in 10 minutes. So do not read into this move. You can see the US dollar completely undoing at the moment up here. So basically my situation today, not good. 2% loss. You might think, how the hell did you make a 2% loss? I made over $1,000, something like $1,300 on the drop on the yen. But I've had to hemorrhage all of that on the pound US dollar 150 ADR move to the upside because I was extended already and we've pushed 150 ADR. So load of drawdown control gone in this morning on the pound. So it's actually turned into a loss day. So got to keep that drawdown under control on the pound US. So yeah, not a great day, but I am happy not to be in the yen. For me, that's a result. So for today, market's just opened. Let me just quickly look at what's going on there. Okay, so short NASDAQ, short Dow. Let's see what these are up to. Going to be quite tricky today. So got a short break on the NASDAQ. Dow has tried to break short. S&P is stuck at the moment. So we've got plenty of downside, as you can see. The high of the previous day is ADR today on the Dow. That little spike before the open yesterday is about 3/4 of an ADR down in that propulsion gap. S&P, previous day's high is 150 ADR. So there's a lot of downside potential. Now, we've just had a massive drop in the US dollar. If the US dollar undoes that and gives us a V-shaped recovery today, all indices will drop. So we'll wait and see what happens. But there's a good chance we will get a move back down again because I think this could be a knee-jerk reaction. A 0.1% differential month on month is not enough to drive something a couple of hundred ADR. So we'll see what the market makes of it. But yeah, big moves today. Let me just catch up on the chat. We'll have a look at the ADRs and everything in a minute. But today is just a case of sit and watch, deal with what you're in because everything, there's absolutely no way of telling where anything's going to go today. How much did I make on the yen? About 1,300 odd. So I made 1,700, 2 grand, 1,800 on those three. And then I closed out 1,300 minus 500 there. I don't know. It's calculator time, isn't it? 1355 minus 550 plus 312 plus 1762 minus 158 is 3,221. But minus swaps 510 minus 340 minus 213 minus 152 minus 340 equals 1,666. That's not good, is it? 666. So yeah, so you can see how much the swaps have cost me. So we've got $500 of swaps there, $1,000, $1,500, $1,600 in swaps to hold that bloody thing. Just not interested. Yens are just untradeable at the moment. It's just not fun. 16% AZ, good job. Well, not well done. I went into a stupid amount of drawdown to squeeze that out. Could have lost my account. Yeah. With high risk comes high reward, as Spider-Man would have said if he was a trader. Afternoon, Brian. Have you made money on the markets today? No. Afternoon, Virginia. All of you yen sellers must be ready for the pub later. Yeah. It's really, really tempting to attempt a pullback entry on this. So stick a fib on that. Look for a 38, 50 more likely retracement. If it gets back to that 50 retracement, that would be an area I would consider shorting. You may have to hold it for a couple of days, assuming that they do the second leg short, which they typically do. It's very rare they do it in one go. They usually do it in multiples. So, but I'm not interested. I'm just not interested. I just want to remove it from my life. On the other side of the coin, RSI2 strategy that I launched yesterday, not doing bad. 1.63% today, sitting in 1.1% of drawdown, but yeah, I can live with that. Why is that all the way over there? Yeah, all good. I learned the hard way and changed my setup. I don't know about auto DD control is such a nice sleeping pill. Yes, exactly. That pound US dollar. Yeah, I've just hemorrhaged approximately 4% on that, but it's fully automated. Don't have to worry about it. The EA is looking after my cock-ups. I've got a problem with this one as well because I got in twice. Again, this was that trade was taken when I had the power cut, and I had the EA for some reason duplicate trades. I've no idea why. I've looked into it and I can't find anything in the logs. It just seems to be assuming it needs to run twice for some reason. I don't know what it is. But so I had double the risk on the first position. So this actually is twice as bad as it actually should be, which is annoying. But it's just one of those things, unfortunately. So yeah, I'm in more drawdown than I should be. Anyway, one move down will pull all that back, so not a problem. I got caught in. It's just in what you said. So haven't slept properly for 2 weeks because of the damn yen. Over leveraged. If you go to bed at night and you are thinking about this and you are worried about this, you are over leveraged. That is a fantastic sign, and probably one of the best signs you can have as to I am over leveraged. If you're worried when you go to bed at night about your drawdown, you've got too much on. Shut it. That is painful for 2 seconds. Immediately after you've pressed the button and that has gone like that, you go, the world is lifted off your shoulders. Just do it. Don't hold it. You're worried about it. Got caught in the euro US dollar trend and was forced to make 10% drawdown control. Again, How? 10% drawdown control. You're over leveraged. If the drawdown control is 10%, what's the drawdown? Far too much. Way too much size. Aussie, New Zealand. I don't know yet. We haven't been told, have we? So today, they haven't really made a move on this. So we'll have to wait and see if that New Zealand dollar weakness is going to hold or they're going to recover that. Again, you know, it's one of those. I said it yesterday. The New Zealand dollar, total unknown. Every time they don't, the way that news works with interest rates is when you change your interest rates, there is a big, strong push or a big, strong dump in your currency. When you don't change your interest rates, usually nothing happens. The New Zealand dollar, every time they don't change interest rates, it goes parabolic for a bit. So I'm really worried about what's going to happen when they do change their interest rates, because if this is what happens when they don't change their interest rates, what's the market going to do when they do, especially if they don't tell us about it? So I have no idea with the New Zealand dollar. There's absolutely no reason for that knee-jerk reaction to the upside on that at all. There you go. There you go. There's a nice little profit there. So that one's completely undone, but that's not undone because of the New Zealand dollar. That's undone because of the US dollar. But there's absolutely no reason for that New Zealand dollar move yesterday. The interest rates didn't change. And the market did that. But this is the third time it's done it. I would expect, based on where we are with that, that we should be looking for a drop. So if you class that as your resistance, we've just broken out of resistance. So we were exhausted before we broke out. Then they broke out. Now they are more than exhausted. So I wouldn't be surprised to see a pullback into this range. And if we do pull back into this range, we might find that we get a nice M-shaped recovery back down into these lows again. There's absolutely no reason for the New Zealand dollar to be massively weak on the fact that they haven't changed interest rates. The Australians haven't said anything either. So there's no reason for this move. So I would look at it being back down there again. But I don't know. We'll have to wait and see. Look, same as this. It's the same as that. Yeah. Changing rates, or rather not changing rates. This is not changing rates, not changing rates, and not changing rates. Just no reason for it. But every time this has happened, it has continued the move. So if it's going to continue the move, you have to look at where it's going, and high of range is up here. But we are also here, look. Right now, we are struggling to get through that area that they sold from. Then they put in a lower high. Then they put in a lower high. So we've just broken out of a symmetrical triangle, look. I don't know. It's a very, very difficult one, Aussie New Zealand. And again, as my testing has shown, it's erratic. So did the Japanese trigger the intervention? Yeah, on the CPI release. Yeah, so basically if that CPI figure means a drop in the interest rates for the US, it means that all the US dollar pairs will drop. If the US dollar is going to drop, their overseas investment, which is most of it, will drop. So therefore, they're liquidating their overseas assets into the yen. To make sure that they don't lose money on it, basically. Aussie dollar Swiss, we've just had ADR hit. Swiss franc, safe haven run going on. Yeah, so there's a safe haven run also going on. So the market is scared. It's pulling money out of everywhere. It's putting it into where it knows it can be safe. It's going into the yen. It's going into the Swiss. Always does the same thing. So, yeah, safe haven run also looks like it's starting to get underway on the Swiss franc. So be very careful today. ADRs, forget it. Yeah, when the ADR dash looks like this, forget it. This is not what the ADR dash is for. This is telling you the market is in complete confusion, turmoil, and gone completely nuts. Don't do anything. Yeah, watch what you've got. Do drawdown control. Take any profit you've got, but do not try and mean revert this. There is a probability of 50% that they will do either that or that. If you fancy that, do it. These are all massively extended beyond 225 ADR, and there's a high probability they'll pull back. There's also a high probability that they will just flag and break and do a second leg, which goes another 200 ADR tomorrow. Yeah, we've also got more news tomorrow on the US dollar. Yeah, so we got the PPI numbers. PPI comes out lower than forecast. That will knock on to CPI. So their forecast for CPI will be a secondary drop. So you've got an unexpected drop followed by something which is an unexpected drop that feeds into the next thing, which will probably be well, forecast this time drop. It's all going to be negative US and in quite a big way. So just be careful with all of this today. You get burnt trying to stand in front of a steam train. Yeah, you get run over. So just be a little careful. So all the RSIs today, there's no point in going through any of this. Everything is completely exhausted. So there's a good probability on all of these moves of a 50% retracement. So if you stick a fib on that candle, or rather the whole move, which is in this case down to there, yeah, scalps back up to 50, 61.8. So if you're going to get a continuation, yeah, you can either play the mean reversion up into it or wait for it to get in there and then short it. Yeah, look for resistance upside, which in this case is 71.9 for shorts. Yeah, so if this candlestick closes where it is right now in the next 15 minutes, which it's going to because it's not going to get all the way up there, you've got a propulsion gap that big about to be painted. Yeah, so go back and look at propulsion gaps that are that large. Yeah, what happens afterwards? Normally, it's a fundamental shift, potentially. So mean reverting these types of moves can be very dangerous. They can also be very lucrative. So you quite often get these moves where they completely mean revert, don't we? So, yeah, completely undone. But there's absolutely no way of forecasting it and no way of knowing. So just be on your toes, basically, today. Afternoon, George. I need to find some suitable auto DD setting because I can't seem to get myself to cut it. Just use the EA. If you're using the position trade EA or the market reverse alerts EA, that's what the drawdown control setting is there for. Do your drawdown control. The whole point of it. Yeah, human beings love to hold stuff. Yeah, we love to go, we're positive. Don't worry, it'll be fine. It won't be fine. Market will push you until you blow your account. Let the EA do its job. Explain briefly about EA activations. You get 10 of them? I don't know. What do you want me to explain? You get 10, which means you get to use it 10 times on 10 PCs. That's it. Simple as that. There isn't anything else. Each license for an EA is one PC. As many brokers, as many terminals as you like on that PC. But if you put it on another PC, that's another license. Same way as all software works. If you buy Windows and install it on your PC, that's it. If you go and try and install it on another PC, it'll go, no, you've already used it. So licenses for a PC. You have 4 VPSs, 2 laptops and a PC. You got 7 licenses. It was a manual DD control caused by running out of margin. Oh, yes. That's not a good one. Again, if you've got a margin call, I can't remember the last time I was margin called. It was long time ago. If you've got a margin call, you're either using a broker with 1 to 30 leverage, you can't, or you're over leveraged. Afternoon, Yusuf. Right, let's see what's going on with these indices. Okay, out of the Dow with $150 pound. What currency? My account, sorry. So yeah, out of the Dow. So basically, we got a 3-hour break. I've been taken out on trailers on that, which I'm quite happy about. S&P long break, Dow, Nasdaq, sorry, short break, but not gone anywhere yet. These are an absolute mess. So basically, as you can see on the UK and Frankfurt today, this is an absolute mess. We haven't gone anywhere. Sorry. I've got in front of me, which you can't see, I've got a kind of wood effect in my office, which is raised, and it's got LED lights around the edge of it. And every now and again, for no reason whatsoever, my LED lights turn themselves on, and I can't figure out why. And it's really distracting because they start flashing at the side of my eyes. Very bizarre. So yeah, sorry, European indices absolutely nowhere today. So I'm looking for an ADR hit up or down on these today to exit, because I want to. I'm going to just lock these losses in because it's not going anywhere at the moment. So I just want to see what's going on with these as well, because I'm stuck in them at the minute. So if I can get all 3 of these over the line today, it would be lovely, because they'll pay for the UK. GJ made me 1.5%. I'm in love. It was a gamble. It was a fluke. It was luck. Don't fall in love with luck. It'll kill you. I was doing a test on the RSI2 set file you posted. I noticed the EA is triggering 2 trades at the same time when you add value on fixed lot size. I was wondering if the EA is meant to function that way. No, you forgot to undo the other one, didn't you? So if you, in the position trader EA, you've got 2 entries and it says use one only. Yeah, so you will have probably put a fixed lot in there, but you haven't set that to 0. So it will take 2 trades because each of these triggers individually. That'll be your problem. Could you also switch to RSI2, which will limit drawdown? Could also switch to RSI2, which will limit drawdown and is automated. So is this. Doesn't matter whether you're using RSI2, RSI14, or RSI21, the H4, the H1, the daily. It doesn't matter what you're using, does it? If you turn off drawdown control, you don't do drawdown. If you turn on drawdown control, you do drawdown. Doesn't matter which strategy you're using, does it? Drawdown control's got nothing to do with strategy. Drawdown control is account protection. Sorry, just answering my question. Right. Just watch these for a minute. So if you've got any FX pairs specifically you want to have a look at, let me know. But today, it's basically watch and see what happens type day. So we need to see what the market's going to do with these moves, whether it's going to continue them or, you know, what it's going to do, because this is quite a crazy day today, and there's been a lot of unexpected movement. So I can do analysis as much as I can, but virtually every currency today is going to be affected because we've got rallies in the Swiss franc, we've got rallies in the US dollar, and we've got rallies in the yen. So the strongest currency in the world against the 2 most crazy. Everything is going to move, and there's very little sense you can make of any of this, because this is just knee-jerk reaction to news and not something that you can read price action into. We need to see what the banks and institutions make of it and then decide to do over the next few days. My suspicion is undo it all, because unless the Fed or the Bank of England come out and say something specific, this is just a knee-jerk reaction at the minute. So we will wait and see what happens. But obviously, everything yen is 225 ADR. You've got your Swiss franc. I mean, everything's just extended, isn't it? So the only thing that hasn't moved today is euro. So euro obviously has moved, but against the Canadian dollar. So the Canadian dollar's dropped with the US. There's a whipsaw on the euro pound. Obviously, US has moved. There we go. Right, Dow turn tail and run north. Got 2 are on the Nasdaq so far. So Nas looks like it's coming down to retest previous day's high, which is ADR. So TP for me on that one is just above that wick, which is spot on, which is around about 3R today. Just going to move that up ever so slightly. Trailing stops on both of those now. So when I get to 2R, basically I have a trailing stop lock in. So if this now pulls back like the Dow did and turns and runs, I at least don't get hedged. Have gone long on the S&P. So complete divergence today. Look, we've got the Dow completely 3R down and 1R up now. We've got 2R down on the Nasdaq and the S&P's broken along. Market's in absolute chaos. Doesn't know what it wants to do today, does it? So one of those days where you wish you basically missed it and wake up tomorrow. Bypass the day. Crazy moves. So if we look at the fundamentals now for the US, they haven't updated yet. So the fundamentals will obviously. Oh yeah, no, 3. Yeah, sorry. Yeah, no, it has updated. So we're now at 3% inflation. So 0.3 down. That obviously gives us more confidence that we're going to be dropping that rate on the US. Again, this is one of the reasons why you can't 100% pay attention to figures. This on paper is exactly what the Bank of England said it wanted before it dropped interest rates. However, the services CPI, which is one small part of the, well, it's not a small part, but it's a part of the CPI number, they're not happy with. So they've decided actually, because that one hasn't come down, we may not drop interest rates. So you have to ask the question of yourself, what if it had been services which was on target and it was manufacturing that was lagging? Would they still have said, oh no, manufacturing CPI is not quite at target, so we won't bother dropping interest rates? Yeah, they completely changed the narrative to suit them. I was moaning at my wife about this yesterday, saying, for God's sake, the Bank of England have just said they're not going to drop interest rates, although they said they were. If you have a mortgage, you know why that's important. But yeah, so at the moment, everything is going in the right direction for drops for everybody. Yeah, Swiss as well. So the only people we've got at the moment, or the only countries we've got at the moment, which are not getting what they want anywhere near, is Aussie and New Zealand. So the Australasian pairs, both bullish. Everything else looking like we should be bear on moving forward. So if you want to set biases on everything, that's kind of the way to go. But obviously with the US dollar, if that becomes bearish, and then all of a sudden Bailey says, yes, we will drop interest rates in August, that becomes bearish. A bear against a bear is a range. So you can actually trade it in both directions. Excuse me. I don't know why I've got a frog in my throat now. Probably shouting at the end. And the football last night. So, yeah, we'll see where everything goes today. But there's not much point in really trying to do any analysis on any of this today, because it's an absolute chaotic mess. Earnings starting tomorrow with some of the banks, with summer trading and earnings about could be time to scale down SIH until end of summer. Yeah. It's very difficult. Earnings used to be the most volatile part of the open. So what used to happen is when you had earnings fortnight, the market would go nuts. What seems to be happening at the moment with the current market situation is earnings is making the market quieter, which is completely bizarre. Your voice is because of Watkins, yes. So I won't be able to speak at all on Monday, just to let you know. In fact, I might. Yes, I am going to probably cancel Monday's stream because it's 8 o'clock. And I doubt very much I'll be in a situation to be able to stream on Monday morning, especially if we win. But anyway, so yeah, the market seems to be a lot quieter at the moment during earnings fortnight. So if you look at what we've got coming up with earnings, where are we? We are the 11th. So we are currently here. So first earnings are starting to trickle in, and it's obviously coming into earnings fortnight. So it's when we get all the announcements for the NASDAQ and S&P top businesses as to how they're performing. So we've got Tesla, Microsoft, Google, Spotify, Ford, IBM, all the usual names that you know of. So this is where the market tends to go a little bit crazy most of the time. But we're here at the moment, so it's this week is kind of the quiet point. These are pre-market as well, so we'll know these before the open tomorrow. Was that no? It's pre-market, isn't it? Yeah. So it really sort of kicks off on the 22nd. That's the week. I'm not here that week, by the way. I'm off on holiday for a week. So yeah, that week is when it tends to kick off. That Tuesday, look at that Tuesday. Coca-Cola, GE, General Motors, Philip Morris, Spotify, Google, Microsoft, Teladoc, Tesla, Visa, all in one day. Half of it pre-market, half of it post-market. That's going to be a busy one. So yeah. Yeah, it's very weird. Everything's weird at the moment. The market is just erratic. Isn't it? I was at the game last night, blimey, in Charlotte, North Carolina, pulling for my dad's nation of Colombia. We got that win. Sunday is going to be a great soccer day to watch. 2 great games, yeah. It's going to be a interesting one. We've been to the finals before. My prediction for the Euro final, I don't know. You have to ask those meerkats. Those meerkats have got it right every time, haven't they? So, yeah, we'll see what the meerkats have to say. But obviously, I've got to say 2-1 to England because we need to at least be drawn for a while to get some momentum to actually score a goal. That seems to be what we do. And we'll obviously score just before the end of the match. Yamal will win it. Yes, probably will. I don't fancy our chances against Spain. I really don't. But you've got to hope. That's what we do in England, isn't it? We hope. We hope we win. We don't usually, but we hope we win. We're a very hopeful nation. You can have Putin approaching our shores and we'll be hoping the boats sink. Anyway, hopefully that doesn't happen. But we'll see. So S&P breaking long, just broken out of the open. So new highs on the day, or new highs on the open session. Dow trying to make new highs. NASDAQ struggling to go short at the moment. I'm going to close the NASDAQ out there. Reason being, that banks me $320 pounds, this account, which pays for the DAX. So the DAX hedge is now paid for with those 2 indices. So my goal today is to try and get a break even, basically. So what I'm looking for is an S&P rally to pay for the FTSE. And then if we do manage to get a rally from the European indices today, I'll have an opportunity to try and hedge out of those. So I'm looking for the S&P basically to break long today. Whoops. Yeah, that'll be my payday today, S&P. So if I can get 3-hour target at pre-market highs today on the S&P, that'll bank me 500. We've got 400 hedge locked in at the moment on the FTSE. So these two have paid for the DAX. That will pay for the FTSE and bank $100. And then I've got the opportunity to run the FTSE and the DAX hedges. See if I can make money. We've won every game on a prayer so far. Yes, we have won every game. Like, as lucky as... I mean, last night, look at last night. Yeah, that penalty wasn't a penalty. But we got it. We took it. You've got to have a bit of luck. It's like trading, yeah? Like the yen today. Luck makes money. Luck in decisions in football, same thing. Yeah, you get lucky sometimes, you win. We have the best player in the whole world and getting to extras. Best players in the whole world. Yeah. Spain are extremely good this tournament. So 3-0 to Spain. Yeah. Hope you're wrong. The EA bought all yen pairs. Yeah, don't trade the yen. EA's basically when you get any moves like this, any EAs that work on rules, you're just going to get weird moves, weird entries. You're going to get all sorts of weird stuff going on. These irregular market conditions will throw indicators out of whack. They throw everything out of whack. Yeah. You're going to get different movement on different brokers because some brokers will have slipped. Some brokers will have gapped. Some brokers will have locked up. The reason I knew this was an intervention move was because I've got 3 terminals open and I was doing something else and I heard all 3 terminals disconnect at the same time. They're all connected to different servers. So I knew there was something wrong. So I looked at the charts and they all came back to life. And obviously I heard the dashboards going nuts. That's the other reason these dashboards are so good. I could just hear like ping, 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 just alert after alert, after alert, after alert. The first thing that went through my head before I even looked at the chart was as an intervention. Good. Tells you there's something to do. Updated John Wick trading setup. What's that? What is that? It's a crystal ball, isn't it? It's meant to be, but it's a globe. Crystal globe. It's got a chart on it as well, look. Which is a bit weird. Fingers. John, what's happened to your finger? His little squishy little finger. It's not right. It's not right. It's not right. It still can't do hands. He's got a very disabled thumb there. He's been biting his nails too much. His nail's actually gone. And anyway, that finger is missing. I had it chopped off, remember? Sorry if I've just spoilt John Wick for you. But yeah, that doesn't exist. So AI obviously hasn't watched latest John Wick film. I don't remember being in this many squeezes last year. No, this has been the squeeziest year I've ever had. Hard getting money from the market, yeah. Very, very tough year at the moment so far. But it is what it is. This is why backtesting is absolutely critical because it tells you what to expect. This is beyond expectations, what we're experiencing at the moment this year. It's just craziness. This is really going to annoy me today. If that collapses and that hedges, That will sum up today, won't it? But yeah, it's a bit of a crazy situation at the moment. The market's experiencing so much new stuff that we've never experienced before. So you've got the pandemic, the fallout from the pandemic, that ridiculous rally in the S&P when the businesses were shut, the biggest bear market we've ever had in the stock indices ever, the largest, fastest interest rate rally we've ever experienced, followed by the longest pause in interest rates for all currencies ever experienced. Now what? And also we've had a war breakout in the middle of it. You know, it's just the last 4 years have been the most confusing for the market. But this year, it really just doesn't know what to do, does it? We've had some very, very odd stuff this year. The markets have calmed down. ADRs, like I keep saying, ADRs are the lowest they've ever been. These numbers here, we've got 1, 2 now, haven't we? Yeah. So the pound yen and the pound New Zealand are the only two currencies over 100 ADR. Normally, 3/4 of these are over 100 ADR. We've got that at 41, 34, 56, 46, 39, 32, 59, 78, 69. You know, there's just no movement. But when it does move, it's like that. Then it stops. And it's like that, and it stops. You can't trade that because you've literally got to be flipping a coin and happen to be in the right direction when it decides to do it. All we're getting, isn't it? It's just craziness. But hopefully it will all come back to normal at some point. When the interest rates all start to move and we get an understanding of how we've got on top of inflation and where inflation is going, probably World War III will break out. Looks like he's got Dupuytren's disease. I can't even say that. Dupuytren's disease. I don't even know what that is. Do I want to Google this? Dupuytren's disease. Oh, there we go. It's not actually that. Oh, it's when you get a nodule in your tendons. Yeah, maybe that's it. That's what you need to do, Brian. You need to ask AI to generate John Wick trading without the Bruin's contracture or whatever it is, and see if it knows what that is. You never know. It might actually. It might actually assume. There we go. There's the news on the intervention. Japan intervened in the Forex market. TV Asahi reports citing government source or sources. Japan's Vice Finance Minister Kanda, I am not in a position to say if there was an intervention or not. This makes me smile. I'm not in a position. It's like you can imagine someone sitting there, right, and like pushing someone over in front of a crowd of people and going, I may or may not have just pushed someone over. Sorry. You may or may not have intervened in the market. Let's dissect it. Normal price action. Every day, what normally happens? Big move. I may or may not have pressed the nuclear button to sell all of our US bonds. God, they are ridiculous, aren't they? The Forex moves since the beginning of the year have been very big. We know. We also have charts, Mr. Kanda. We can see them too. And are impacting households. We know. This is why we kept saying you should do something about it. I am not in a position to say if we did. Forex moves that are not in line with fundamentals are quite concerning. It's like someone standing in a house that's on fire with no fire extinguisher, and it's gradually moving around to the front door in front of them, and they're going, I might think about getting out of this at some point in the future. It's getting closer to the front door. Maybe I'll think about walking towards the front door. Run. Mental. Absolutely mental. They're just, this is why I'm not trading them. Oh my God, it's doing it as well. So NASDAQ's just hit TP1 and I'm about to get hedged on the S&P. It's not going to be my day today, is it? Means he has Viking DNA, does it? Did not know that. We're talking about Dupuytren's disease, by the way. Right, S&P's breaking down. So we've got an ADR hit just going in on the NASDAQ. So I would say the US dollar looks like it's probably strengthening up a little bit. Doesn't look like it is, actually. So Doji gone in there. 3 hedges today. Not good. So these two basically have now paid for that. So I'm going to have to deal with the FTSE and the DAX. So S&P, I'm going to leave TP at ADR. We may get a move down to 150, which is next support. But if it gets to ADR, I'll look to get out. And the same with ADR to the upside because we're all-time highs. So there's nothing much you can do with that to the upside. But downside, obviously, you can look for target. Yeah, just absolute mess today. Absolute mess everywhere. Is it possible to use the new RSI2 EA as alert indicator? There isn't a new RSI2 EA. Yeah. People are getting confused. This is the position trader EA, which is a move on from the market reversal alerts EA. Does exactly the same thing as it's always done. But no, you can't use it as an indicator. No. Why would you want to? If you want an indicator, so basically what you're saying is, can I use the EA to replicate what the RSI dashboard does, which costs half the price? Use the dashboard. If you don't want to trade automatically, use the dash. Dash alerts to RSI extensions. That's what you need if you want alerts. EAs are designed to trade. They're not designed to alert. There is some strength coming in the US. I think they're going to undo this move. I'm exiting. I might regret this, and I might have to re-hedge this, but I'm exiting my S&P longs. Which is 350. So if we break the pre-market low today on the S&P, we're probably going to flush. So downside on the S&P, if we break this pre-market low, obviously it could well get down to 150 ADR. So what I'm going to do is I'm going to use some what was it? Sorry, one second. I just need to do maths here. 352. So I'm going to put 1 TP at 250. So that gives me $100 loss on this position, and try and get a runner down to there to make profit today. But it looks like the market is going to flush. So if this is flushing, it means that the US dollar is rallying. If the US dollar is rallying, it's likely that it's going to completely do a V-shaped recovery, as I said, on that move, because there is no reason to do that when you've just had a 0.1% hit on interest rates, on inflation. It's not enough to make the market go, holy crap, sell the hell out of the US dollar. Not that bad news. And obviously, we're going to get a pullback on the yen as well, potentially. So that will obviously boost the US dollar a little bit more as well. So all the way back down on these, I reckon. Suzuki declines to comment on Forex intervention. Is coming soon. Yeah. Wouldn't put it past him. If we did intervene today, we'll disclose it at the month end. If I did push that bloke over, I'll let you know another day. It's on camera, mate. It's obvious. It's exactly the same, isn't it? Exactly the same as they did last time. We will neither confirm nor deny whether an intervention was caused by us in the Japanese yen. Then, like, literally 3 days later, they came out and said, yes. And we told the US about it before we did it as well, just to warn them. So the US is in on it as well. And the US knew what? CPI numbers were coming down. So the US phoned Japan and said, just to let you know, all your bonds are going to go down in price in about an hour. All right, excellent. Get ready on the button, guys. Only we had that little phone line tapped between the US and Japan, we'd make an absolute fortune. So yeah, looks like we've got 3-bar reversal going in, A-shaped recovery. We'll see how we get on, but that looks like the play today. Back into profit on the S&P. Do not stand in front of this and try and do that today. This thing, we could see 150 ADR day on this easy today. Nasdaq's already 125. TP just about to hit. What have I got? 170, 150. That's that paid for. Just going to close one out there, just in case this retraces. And I'm going to go for the previous day's high target, which is there, which is 150 ADR. Might do, might not. But I've got a trailing stop on it anyway. So it doesn't look like it's going to be a profitable day today, unfortunately, because my fault. I shouldn't have closed that out. I should have let it run. But hey, if we knew that, we'd do it. Does that mean everyone in Sweden has Duptren's disease? Everyone in Sweden? Why? Why have the Swedish haven't got funny hands? Have they like that? I know a Swedish person. They haven't got funny hands. Certainly not like John Wicks. 1.35% among men, 0.5% among women. Really? I did not know that. What is the overall profit for the year for the stock index Hedge EA, please? I want to buy. I have no idea. How have you traded with it? Happy chappy? I don't know. There is no such thing as what is the profit. What settings are you using? Which instruments are you trading? Which days have you decided to trade? How far away are your pending orders? Did you get hedged or did you not get hedged? Did you manually intervene? Did you not manually intervene? Did you use a 1 hour, a 2 hour, a 3 hour target for your initial trade? There is no answer to that. Yeah, it's an opening range breakout EA that opens trades with momentum at the open. That's what it does. What you do with it afterwards is entirely up to you. You can let it go full auto, or as I did, intervene. If you intervene and you're wrong, you cock up. If you intervene and you're right, good job. 50-50 shot every day. So, I don't keep logs of my products. I don't have signals for my products because there are too many settings. My products are designed to be manipulable by you so that you can use them how you want to. There is no one way of operating. 115 profit on the S&P now. These European indices are probably going to come down as well. So I'm $250 down at the moment, pound, on this account. So that's a break even for me today. So I'm going to leave it as that. I'm just going to let these run. For you, Profit You Expert. For you, Profit You Expert. I don't know. I don't know. Happy Chappy wants his infinite money glitch. Yeah. So I'm going to leave it there today. Sorry, I keep opening that chart. Something else I was working on. So basically just going to obviously monitor what goes on today. I think there's a high probability of some of these reversions today, but what they do after that, don't know. So what I'm going to do is I'm going to just work on reducing exposure at the moment. My pound exposure is obviously all short at the moment because expecting basically a drop in interest rates. My US dollar exposure is all long at the moment. So I'd like to, if possible, if I can get some of these down to close to break evens, I might just try and reduce exposure a little bit because I'm a little bit overexposed on the pound at the moment. And I'm not convinced the pound is going to actually weaken. Market does not seem at the moment. US dollar is really strengthening up. Look, pound at the moment doesn't seem like it wants to even come and retest the second half of yesterday's move on most of these pairs. So I'm just a bit worried about this pound running away after what was said yesterday. But again, I think this is a little bit of an overreaction from the market to what was said yesterday. That was just one member of the Bank of England saying that he was anticipating a bounce and hold of interest rates, and he wouldn't be comfortable dropping them yet. That's 1 out of 9. Yeah, so it's not really, I don't think, cut and dry until we hear from Bailey that this is bullish. I think this is the market unraveling their positions because they were also positioned short, because they were waiting for the interest rate drop to happen, and then they would have added into their shorts. But what they've had to do is undo the shorts because they've got now mixed signals coming through, exactly the same as we have with the Fed at the moment. So I just want to try and get back to a little bit of a smaller exposure if I can on the pound. So I might close out some of this profit and try and get out of some pound, like euro pound. I can shut that completely at 0.25 loss. It's not the end of the world. So if I can take that $200 off using that, I can bank 100 and get out of a bit of exposure. So I just want to give it really the end of this session just to see where they end up. It's a bit confusing at the minute. So tomorrow I'm back in the morning. So we will do analysis basically of, this week. It'll be interesting. And we'll trade the FTSE and the DAX tomorrow morning. Hopefully we have more luck tomorrow morning within double hedges. But so I'll be back at 7:45 tomorrow morning. We'll have a look at what's coming up. Just bear in mind, if you're not around tomorrow morning, we've got PPI tomorrow afternoon. So there is potential after what we've seen there, I think, for more negative news tomorrow on that US dollar. But if that comes out as positive, it will confirm that these figures are just a temporary blip and we're probably going to get a tick up, which again will make the market shift back in the opposite direction to what it's done today. So it's just erratic. All the market's doing at the moment with the US dollar is moving on news. Yeah. Other than that, they have no idea, and neither do the Fed, on where this is going. So just bear in mind, you've got that tomorrow afternoon. We've got Michigan as well, which, as we know, Michigan can really move the market. So we'll see where we are. We'll have a look at everything. But be careful with any of this today, all right? Because it could be continuation moves. We'll have to wait and see what happens. So have a good day. I'll be back tomorrow afternoon. Anything else tomorrow morning? Anything else you need, let me know. Other than that, I will see you guys next session. Have a good one.